welcome to our weekly session of Chartsarefun. This is Rohan Singh and Avijit Chatterjee recording this on Friday, the just about market close on the May 3rd. So this is our website, our YouTube site, Chartsarefun. Today, what you can talk about is the market activity, talking about the key ETFs, followed by the sector spiders, the 11 different sectors, how they performed. And then from there, we'll move on to talking about Berkshire Hathaway. This is the one of the largest managed fund with over 40 different stocks in their portfolio. They have their annual shareholder meeting with Warren Buffett out there on Omaha, talking to shareholders for almost a 5-hour session where people can ask him questions and he's going to answer to the panel and the questions that the shareholders ask. It's going to be exciting to hear how he responds to over $160 billion of cash that they hold in the balance sheet. And of course, a great celebration with the Apple earnings that had the stock move up huge, impacting and helping the Berkshire Hathaway stock today, which owns about over 45% of their holding in Apple. So with that, this is our website, our channel, Chartsarefun. We request you to check out our videos here, which we post weekly. And also, if you subscribe to the channel, we appreciate that. And also, if you like the videos, if you could hit the like button, we appreciate that as well. It helps us share this video with a broader audience. We also have our regular blog site at substack.com, chartsarefun.substack.com. You're welcome to check them out. Just posted a blog about Berkshire Hathaway and some of its core holdings. Where is the stock itself headed, the BRKB, and also, touched on their core holding Apple. There are other blogs posted this week, and it was quite an exciting week. This was the week of FOMC. Fed chair came on the press conference on Wednesday. There was expectation that he would perhaps be a bit hawkish, knowing that the inflation data has been pretty hot the last 3 months. However, he did turn on and said that he's data dependent. He's not making any promises for cuts near term, but he does see a steady progress in terms of course, it's more data dependent on the line, but he does see a progress of inflation gradually getting towards his 2% target. So he seems optimistic on that. And he feels that it's restrictive enough in terms of the interest rates. 5.25 to 5.5 is where the current interest rates are. He considers that restrictive enough and he just wants to watch on time and see how this helps the market kind of move towards its economic in expectations, and whether the restrictive environment helps inflation bring it down towards 2%. Today, the jobs data did come out, and there's been expectation of over 200,000 jobs. That turned out to be not what happened. The jobs were much less than that expected, and that just helped the market rally. Market thinking that this adds to the dovish tone for the Fed, hopefully, because recently there were concerns with the heated inflation of hawkish tone. But with the job data being much tamer for the month of April that was posted, the market thinks that perhaps it's going to be accommodative for the Fed and for them to be dovish again. So with that, let's look at the core index performances. These are the core ETFs. And the way we've sorted these out is using we're looking at, in this particular case, the 6-month, but I could just bring it down to 2-month comparisons. And the core factor that we're looking at here is the rate of change. Rate of change measures over the last 5 days what has been the movement of that particular ETF. So we can see that sorted by descending. The biggest movement that happened this week was in the international ETF emerging market EEM. That's the MSCI emerging market ETF. The next best was the long-term treasury ETF TLT. Third one was the small cap ETF IWM. So EEM went up 3.12%. As of market isn't closed in the next 3 minutes, but it's pretty much maintained a 3% plus for the week. Over 2% for TLT, the long-term treasury 20-plus year ETF. Small caps did quite well at 1.7. Every time the market thinks that interest rates are actually not going to shoot higher, interest rates will kind of have a downward trend. It does help the small cap. They're extremely interest rate sensitive. TLT, of course, is directly correlated with interest rates. The lower the rates, better the TLT. In this case, the 10-year did take a pullback this week, and that has helped TLT get a decent climb. The Dow Jones Index ETF DIA, that's today, of course, getting a good boost from Apple. Apple is one of the 30 components of the Dow Jones, and that's helping it do quite well. QQQ, the NASDAQ 100 ETF, is also up about 1% for the week. The Dow Jones and the NASDAQ QQQ are both about similar 1.18, 1.12. S&P 500, however, has lagged. It's at 0.67. The dollar actually was down for the week, minus 0.8. Gold and silver were both down for the week, but interesting enough, are reflecting doji reversal candles. So it's possible that next week one could perhaps expect some form of reversal in the precious metals. Both gold and silver might be getting a bid after having a nice pullback over the last couple of weeks, and they pull back now, ending today with kind of a doji reversal candle. You see a long tail on the bottom, and then the close and the open almost on next to each other. And that's how a doji reversal candle happens. The Bitcoin ETF, the grayscale GBTC, was down 3% for the week. However, the last couple of days, it's got a recent rebound. And VIX, of course, is inversely correlated to the stock market. The fact that we've had a great week for the stock market, rebounding, quite a bit, VIX has come down. In fact, over the last 2 weeks, if you remember, the market has come up quite a bit. So QQQ from a level near 413 that it hit 2 weeks ago, that's when VIX had shot up over 20 and touched 21, is now rebounding today, thanks to Apple. It's rebounded over 8-9 points, and it's closer to 435 as of getting closer to the market close. So VIX is now inching lower towards the 13 handle, and if any, looking close to closing its gap down here from late March, right below 13. So that's where VIX seems to be headed next week, perhaps a little more upside in the market with VIX closing out this gap. Now, some key things to watch in this is the emerging market, of course, had a nice move from the 39 level to the 41. That's kind of a bit of a cup, then had a handle, and then it broke out. So if you take 39 to 41, that's about 2 points. Add that to 41.5, 43.5. Today we are at 42.5. So another point plus move in emerging markets cannot be ruled out. TLT also had a reasonably good week. The last 3 consecutive days it has been climbing, and now it has broken above the 20-day moving average, headed up towards the 50-day. The blue is in 20, the red is the 50-day. However, the key thing here in mind is TLT overall looks a bit bearish. Why? Because both the 20-day and the 50-day are declining, and there's had a bearish cross the 20 days below the 50. So that's kind of a bearish looking chart. The EM was on the verge of a bearish crossover, as in the 20 going below the 50. However, with the recent bid of the last few days, it started climbing. So now the 20, while it was about to cross bearish, is now about flatlining and hugging along the 50 days. So both the blue and the red moving averages are on top of each other. Small caps clearly has a bearish cross, the blue, the 20-day below the 50-day. However, the key thing in mind is while the blue is declining, the 50-day longer-term moving average has not started declining yet. It's kind of plateauing out. We can see that the red curve is kind of horizontal near the 202 level, but it hasn't started declining yet. Key is that this week it has not managed to close above the 202 level. We can see that right now it's right below the 202, 201.74. So that's a bit of a bearish black candle here, which means the small cap ETF didn't manage to successfully close above or successfully close above its 50-day. That's something to watch. There is a gap here that it closed out today, but that perhaps still a possibility that maybe it could resume a downward climb because the 20 days declining. The Dow Jones Industrial ETF DIA is a similar kind of pattern as the small cap. The blue 20 has a bearish cross below the 50. However, the 50 is just kind of plateaued out, has not started declining in full earnest as the 20 days. The QQQ, similar kind of bearish cross, the 20 below the 50. However, notice similar issue. It's capped higher quite a bit today. It's up over 9 points, 9 handles from near 426 yesterday to 435 today. But the key is that it's not able to close above the 50-day moving average. It's kind of being rejected at the 50. It's 436 or so. It's just below that. So that's something to watch by then the market close if it's able to close. Same thing with the S&P 500. ETF, SPY, a bearish cross, the blue below the red, as in the 20-day below the 50. The close seems to be forming kind of a bit of a reversal doji, up and down, close and open levels at the same point, and it seems like it may close right at its 50-day moving average. The dollar actually broke below, though it has been overall quite a bullish chart. The UUP target that I still have is near 29.6. This week it got a bit of a pullback. Last 3 consecutive days, especially after FOMC on Wednesday, with the dovish FOMC, the dollar didn't get a bid. The dollar tends to get a bid when interest rates are trending higher. The fact that interest rates didn't do well, TLT rallied, yields came down, and that caused the dollar to go down. So that's the very bullish chart, though, because the 20 days clearly above the 50, both are climbing. However, it's possible that the dollar might pull back to close its gap near 28.2 or 28.3 and test its 50-day rising 50 there near 28.4. That's something to be watched. Gold and silver also have bullish looking charts in terms of the 20 clearly above the 50. Both the blue and the red line moving average is climbing, but the key thing here, which is bullish, is this ending candle for today showing a doji reversal, as in the open and the close at similar level, leaving a long tail in the bottom. Similar thing here. So and also low volume in this pullback in the last few days. So that's kind of a bullish pattern. Bitcoin bearish cross of the 20 below the 50, the blue below the red. The red is still climbing though, so there is still a bit of a bullish trend, but to be watched if this fails at the declining 20-day and then starts its primary decline. There is a possibility that that could happen. And VIX, as I said, is like significantly come lower from the 21 handle that it tested 2 weeks ago. And since then, as the market has been climbing, VIX has been coming down. It could close out this gap near just below 13 and then maybe resume its climb as the market pulls back. So that's the key core ETFs of the various key exchanges or the indexes. Now let's look at the sector performance. So this week, again, utilities did very well. Utilities actually have been doing very well for the last couple of weeks. You can see how XLU has climbed from near 63 to 68. Today again, it's climbing 0.66%, much below the technology sector 2.94. But for the week, it was the best performing sector. It climbed 3.22%. That's why the 5-day rate of change is 3.22. Next is the technology sector, XLK, that's at 1.5. The real estate has also got a reasonably good week. With interest rates when they come down, it helps the real estate. So the fact that the 10-year yield trended lower this week, it helped the XLRE. That's up almost 1.43. Now, the key things to keep in mind here is this is a bullish looking chart, the 20-day and the 50-day climbing, well aligned in a climbing fashion, the 20 above the 50. This one is kind of trending to become bearish, the XLK chart, the technology sector. Why? Because the 20-day has bearishly crossed below the red 50-day moving average. And the 50 days also plateaued and begun to drop. It's in the early stages of its drop, but if they both drop and they kind of go lower, then there's a possibility that if XLK dips below 190 and breaks lower, we could measure something around 170 level, because 190 to 210 is about 20 points. Subtract 20 from 190, we headed towards 170, which is down at this level. So something to watch on the technology sector. Discretionary is the fourth best performing, up 1.2% to 4% for the week. Today it's up 0.78%. Healthcare is the third best at 0.69% for the week and 0.32% today. Staples, and by the way, healthcare is also a bearish looking crossover. The blue 20-day below the 50-day, both are declining. In this case, also the discretionary, the 20 is below the 50 declining. 50 is kind of plateaued and begun to decline. Here, interesting enough, the Staples XLP was up 0.5% for the week, and today it's up 0.42. Most of the climb for XLP, though it was declining early in the week, was the move today. However, the key is the bearish cross has happened with the blue below the red, but then because of the recent climb that the XLP, the stable saw as the overall market was pulling back, it has begun to turn back higher, the blue above the red. It's not above the red yet, but it's begun to climb the blue, and the red is still climbing the 50-day. So this is not yet as bearish a chart. XLI is just flat line for the week at 0.17%. That's industrials getting ready for a bearish cross. The blue is getting ready to cross below the red. Similar kind of bearish cross being seen in the basic materials. While the precious metals are in here, you also have steel, you have copper, and other basic materials. That's kind of getting ready for a bearish cross. It was also flat for the week at 0.27%. Today, it, however, has a good upswing in terms of up 1%. Communication, that's where the internet stocks are, is up 1% today as well, but for the week, flat line at 0.27. Financials actually had a negative performance for the week. The only two sectors that were negative for the week, the financials and the energy. Financials was -0.5 and energy were the worst, as -3.5. So energy now, as you can see, has a big drop over the last couple of weeks from 98. It has come down to closer towards in the 92 level. You can notice that now it is testing its rising 50-day moving average in red and just might manage to close. It's just at that level. So it might manage to just close at that 50-day. However, the 20-day has turned lower, as in it has curved lower. Now what we need to watch is how does the XLE, the energy sector, perform for the next several weeks? Will it continue its downward momentum? In that case, you can expect the 20-day to decline further and maybe have a bearish cross of the 50. Financials already has a bearish cross. The blue 20 days below the 50. 20 days, 50 is kind of climbing, but beginning to plateau out. So this could also have. So taking the bigger picture, if I look across the 11 sectors that gives the S&P 500, the 500 stocks in it, we can see that there are only two sectors really that are bullishly aligned in terms of the 20 above the 50 and both climbing. It's the utility. This one has a bearish look. The technology, real estate has a bearish look. Discretionary has a bearish look. Healthcare has a bearish look. Staples had a bearish cross, but now flatlining and beginning to climb. So this is turning from bearish to neutral. Industrials getting ready for a bearish crossover, so bearish look. Basic materials, same thing, getting ready for a bearish crossover, so bearish look. Communication, also a bearish look. And in terms of the financials, bearish crossover. And the only thing, other sector that still is positive with the 20 above the 50 is the energy. However, early signs of weakness turning into neutral because the 20 now has begun to drop. 50 is kind of still climbing, but beginning to plateau. So this is an early sign of a bearish trending sector, while 9 of the others are. So utility, energy, and to some extent the staples look reasonably okay. Utility by far is the most bullish, and the other two are kind of neutral, the staples and energy, while every other sector has begun to turn bearish. So with 9 or 8 of the 11 looking bearish, you could see that there's a good chance that down the line, you're looking for an S&P 500 to evolve to more of a correction. Unless everything changes and we get a massive rally moving forward with maybe more tame inflation data coming up in the next couple of weeks, and then it's possible that we could perhaps start getting a climb back up in the these respective sectors and their charts improving. But till now, these all have bearish crosses. They look like there's more downward possibility down the line. Key thing to keep in mind with the Warren Buffett shareholder meeting, tomorrow, where he's going to be on stage speaking 5 hours in Omaha. What are their core holdings? Well, Apple is by far the biggest weighted holding at 45.5%, Bank of America at 11%, American Express at 10%, Coca-Cola at 7.19%. No wonder you see Warren Buffett sipping his Coke whenever he's up on stage or whenever he's out there talking to various folks. You can see his favorite Coke bottle in his hand. Chevron Corp, he's also invested in quite a bit in energy. He owns Chevron and Occidental Petroleum, both at about close to 5.6% to 4.5% on Oxy. Kraft Heinz, he loves his ketchup at 3.5%. Moody's is the ratings company, credit rating company. He's got a portfolio there 2.6 times. If I take the Berkshire BRKB, which is their B shares, and then look at the year-to-date performance of some of its top holdings, and also throw in S&P 500 in here. So the biggest and the performer in this group of Berkshire holdings was S&P and BRKB, the B shares, is actually the AXP. AXP is the American Express, which is their third largest holding. So when I shared with you the core holdings, Apple, Bank of America, American Express at 10.2. So that's actually the top performing in the relative set of stocks that we're looking at. So it's American Express is by far leading at over 24%, 24.6%. Then is the Berkshire B. It's at 12.9 or 13%. Bank of America is doing reasonably well at 11%. Occidental Petroleum at 8.2. S&P is actually below that. It's in this case, the fifth performing at 7.9. Chevron is not too far from S&P at 7.8. Coca-Cola at 5.95. And then three of these are all negative for the year. Kites, Kraft, Heinz, KHC, that's at minus 0.6. The Moody's is at 2.29, and then Apple is at down. So Apple today made a significant recovery, as we see. It was actually trending below for the year at down 12% year to date. By the way, this is on the timeline from the beginning of the year. That's for the relative performance for the year to date. However, with the big earnings related climb that Apple saw today, it got almost a 7% climb from minus 12. Now it's at minus 4% for the year. So that helped quite a bit. Otherwise, this was the worst performing, though it has the biggest weighted position in Warren Buffett's Berkshire Hathaway at over 45% weighted. It was the worst performing stock. So now it's look at the pattern of BRKB. This is a very interesting chart, B shares of Berkshire Hathaway. On one hand, you can see a double top. Why? Because it tested the 430, was only an intraday peak, but it was more towards 425 is where it started the day, and it closed a lot below. And then here is another resistance at 425 that it failed and then pulled lower. If I take the two tests of these 430 to 425, that's a double top with lower RSI. So that's a negative divergence, double top. Now that double top with the 401 to 430, that's 29 points. Subtract that from 401, that could go a lot lower. That's about 20, it's like almost 468. However, 368 from 401, taking the 29 points and subtracting. However, no, so 430 to 401 is roughly 29 points. Subtract 29 from 401, that's roughly 470. 72. 472 is where, 372 is where that is headed. However, if you look at when Berkshire Hathaway pulled back and it came to 395, 396, it went up to 411 to test the moving average from below, failed, came back again. This is actually setting up to be more of a W-shaped double bottom. Two tests of 395, 396, positive divergence in RSI, where the next time it tested 396, the RSI was higher than the previous one. This is something we need to watch. If the Berkshire can continue climbing and take out 411, that's a W-shaped bullish move, and it could negate this double top pattern, and it could run from 395 to 411. You're talking about roughly 16 points. At 16 to 411, that's 427 above the previous peak of 424.52. So that's something to watch. Is this going to be a double bottom, W shape? And a W means this is the W, forming the W and now climbing back to the top of the W near 425 to 427, or is this going to be a double top from 430 now? If you take 395 as the breakdown level, 395 to 425, that's roughly 30 points. Subtract 30 from 395, that's 365. So that's more towards down here, 363, 364, which was previously resistance that could now turn out to be a support that Berkshire could pull back. So this is where we need to watch Berkshire. Is this going to be a double top pattern, breaking down below 395, going to 365, or is this going to be a W-shaped double bottom that takes out 411 and runs to 427? Now, if we look at the individual components and do a similar kind of, 6-month performance here, but the rate of change is down over the last 5 days. As you can see, Apple by far had the best move this week from a -5 to -7% rate of change 2 weeks ago, late April, to now it was on the other extreme, over 8.7% up for the week. Moody's is the second best at 1.18 for the week, Coca-Cola at 0.84. BRKB itself is down for the week at -0.03. Bank of America is down -1.6 for the week. American Express financials today this week has not done well, down 2%. And CVX, the Chevron, we know also had a down week, down 3.59. The Kraft Heinz, the ketchup company, that's also had minus 4.9, almost 5%. And Oxy Petroleum is also minus 5%. So weekly performance, everything was really poor in BRKB except Apple. It stopped holding it up quite strong, and Moody's managing a 1.18, and Coca-Cola. The rest are all kind of negative. That helped pull the BRKB weekly performance down to flat, minus 0.23. Looking at the charts, however, a clear bearish cross of the 20 below the 50, both declining, is the Apple chart. However, Apple's gap up today on heavy volume, going back to test its previous resistance, which now it'll come back and test again, is 190. So that's where it seems to be headed. However, intraday it had touched a high closer towards 186 or so, and now it is below, near 184. So that's something to watch. Moody's has had a bearish cross, the 20 below the 50. The 50 has begun to plateau, not yet fully declined, but begun to plateau, something to watch. Coca-Cola is in staples. If the staples had a bearish cross and then started climbing again, Coca-Cola chart shows that. You can see that it is the blue going above the red. So from a bearish cross, it has become a bullish cross again and maybe begins to climb. So Coca-Cola is possible could outperform over the near term. BRKB itself has a clear bearish cross, the blue below the red, as in the 20-day below the 50. The 50 is plateaued out and might start declining, so not a very bullish looking BRKB, and that's we talked about. If BRKB has this double top and breaks below 395, that's going to 365, so that's a bearish resolution on this chart. However, if it is able to take out 411 and then climb, now that's a W, and that this would mean that it might turn out to be like a Coke. The blue could turn back higher and cross above the red, something to watch. Bank of America 20 is not yet declined below the 50, but getting ready, narrower. The gap between the two kind of getting closer to each other, something to watch. American Express flatlined, and then they're both climbing. So it did not have a bearish cross. It came to a bearish cross, but because of its great performance after earnings, it has helped the chart stay bullish. The 20 continues to climb with the 50 holding above each other, which is good. Chevron had a pullback recently, and that pullback, if it continues, could help the 20 curve and go below the red. Right now it's bullish, the 20 above the 50 and both climbing. The catch-up KHC, that one, in fact, the 20 is above the 50, climbing quite a bit, and overall seems to be bullishly aligned. This is also a classic staples company that belongs in that index. Occidental Petroleum is the big natural gas company and the drilling, and there you can see that bullishly aligned, 20 above the 50, climbing. However, because of the reasonably good pullback from 70 plus to near 64, this is beginning to have the 20 start curving. So this could be watched down the line to turn out to bearish. If the 20 crosses below the red after it turns down lower, below 165 and lower, then this could turn out to be bearish chart. And if this decline continues, then that's when this could be bearish. Right now, it's something to watch. So with that, I think we touched on the core holdings of Berkshire, all the way from Apple to Bank of America, American Express, Coca-Cola, Chevron, Occidental, Kraft Heinz, and Moody's. We talked about the top 8. And we said that to sum it up, that Berkshire Hathaway, while as a chart, is something, doing quite well for the year to date. It's up 13%, and its top holding, one of its top holdings, American Express, performing over 24.6. And its worst holding actually is Apple, one of the highest weighted in the holdings, as 45% of their weight is on Apple, and that turns out to be down almost 4% for the year to date, 3.85. The chart itself of BRKB looks like potentially a double top if it breaks below 396. However, it could be a double bottom if it takes above 411 and continues the climb. So something to watch. If that's the case, then that means that the market may not have a bearish outcome. If Berkshire Hathaway is one of the parameter stocks of the overall US economy in the market, if Berkshire Hathaway resolves into a doubly shaped double bottom, this could mean that we probably have seen the bottom of QQQ near 413, and we could perhaps get a climb again in the market of QQQ and the overall indexes itself. That, have a great week. Talk to you next week. Thank you.